Welcome to the deep dive. Today we're cutting through some of the complexity around something really fundamental, life insurance. We've been looking at insights from Canadian financial advisor Hari Nathan Roy, trying to pull out what really matters, our goal, to figure out, what is life insurance really? Let's face it, it's not exactly dinner party conversation, is it? Okay, let's try and unpack this a bit. Hari Nathan Roy puts it pretty simply, which is helpful. He says, life insurance is a contract where you pay a little now to protect your family later.
Mm-hmm.
But what does that actually look like in practice? How's it a safety net?
Right. Well, it's quite straightforward at its core. You pay a regular amount. The premium could be, say, $30, maybe $50 a month. Depends on factors like your age, your health. And then if the unexpected happens, if you pass away, your loved ones get a lump sum payment, a single, usually quite large tax-free payment. It's there to help cover immediate costs, sure, like funeral expenses. But more importantly, it's about giving them financial stability, helping them manage while they grieve and, adjust.
Okay, so it's really about that peace of mind. Knowing your family won't suddenly face a financial crisis on top of everything else. What's the kind of bigger picture impact there?
Well, think about it. If you're the main breadwinner, right? You've got rent or a mortgage, maybe car payments, kids' school fees, all that stuff. If you're suddenly not there tomorrow, where does that money come from? It's a hard question. Life insurance basically steps in. It says, okay, I've got your family covered for a while. It can literally mean they keep their home, that the kids can stay in their school, that sort of thing. It protects their future plans.
That makes sense. Now, here's something Hari Nathan Roy's work really highlights, and I think it surprises people. This idea that it's really expensive, that seems to be a huge barrier.
Exactly. It's a really common misconception. The reality is, especially if you start when you're younger and healthier, the premiums can be surprisingly low. We're often talking less than, say, your monthly streaming subscriptions combined.
Really?
Yeah, maybe the cost of grabbing a couple of fancy coffees each week. And for that, you could be securing a payout of like $250,000, maybe even more for your family. Insurers see younger people as lower risk over the long term, so the cost reflects that.
Okay, that affordability point is key. But are there other things people misunderstand? Reasons they might still hesitate?
Definitely. A big one our sources point out is that people often think life insurance only pays out when you die. But many policies today have what are called living benefits.
Living benefits, what does that mean?
It means you might actually get a payout while you're still alive. Say you're diagnosed with a critical illness like a serious cancer, or you have a heart attack. Some policies allow you to access a chunk of the death benefit early. That money can help cover medical bills, lost income. It's support when you're fighting the illness, not just after you're gone. And then you have permanent insurance, which is different from term. Permanent policies cover you for life, and they build up cash value over time.
Cash value. Like savings.
Kind of, yeah. It's a sum you can potentially borrow against or even withdraw, maybe for retirement or an emergency. So it has benefits during your lifetime, too.
Right. And we should probably stress again, nobody's really too young or too healthy to at least look into this. In fact, that's usually the best time, cost-wise. What about work insurance, though? Lots of people have that. They might think, I'm covered.
Yeah, that's a really important point Hari Nathan Roy brings up. Group insurance through your employer is great. It's a good start. But there are a couple of things to watch out for. First, it often ends if you leave that job. You can't always take it with you.
Ah, okay. So it's temporary in that sense.
Right. And second, the coverage amount might not be enough. Often, it's maybe 1 or 2 times your salary, which sounds like a lot, but when you factor in replacing your income for years, paying off a mortgage, it might fall short of what your family actually needs.
So it's a piece of the puzzle, but maybe not the whole picture.
Exactly. Think of it as a foundational layer, but you likely need your own policy for complete protection.
Okay, so wrapping this up for today, what's the main takeaway for you listening? At its heart, life insurance seems to be about, well, financial protection, yes, but it's also kind of like love in action, planning for your family's future. And hopefully, as we've explored, it's maybe less complicated and more accessible than many people think.
And that leads to a question for you to really think about. What does your own financial safety net look like right now? How prepared are you really for those unexpected things life can throw your way?
Some food for thought there. We really hope this deep dive gave you some valuable insights. Definitely tune in next time because we're tackling a big one. Term versus whole life insurance. What's the actual difference? Which one might be right for you? We'll keep it straightforward and hopefully really clear, just like always.